What is going on, investors? Hopefully guys are doing well out there. If you're looking for Tesla Q2 analysis, I think you've come to the right place. So we're going to jump into these financials, take a look at the revenues, the profits, the vehicle production, the ramp up of the different facilities and factories that Tesla has. We'll take a look at different segments of the business. Folks, we're even going to talk about the energy and storage business on today's show. Take a look at the progress there. That's actually been impressive. We'll look at the balance sheet. We'll look at cash flows. We'll look at vehicle gross margins, and then we'll come over here and look at this from a technical perspective as the stock essentially trading flat in the after hours at the current time. Tesla trading at about $744 per share. This is on the heels of over the last year being up about 12%. There's not a lot of stocks over the last 365 days that are up. Tesla is one of them, although if you stretch this to kind of a year to date, you are down 38% on this stock. We'll talk about broadly, is this a good buy the dip opportunity? Now, those Q2 numbers came in after the bell. Revenue coming in at $16.9 billion, essentially in line with estimates as they continue to get walked back all the way up until essentially Monday. Original estimates for Tesla earnings were far higher, but obviously with all the shutdowns in China and different types of supply chain issues that Tesla and many manufacturers are running into, well, those estimates kind of came back a little bit. I tell you what, if you would have told us 3 or 4 months ago, they would have printed under $17 billion on that revenue side. Quite frankly, it would have been a disappointment. So understand that about estimates as they start to come in as the information becomes more clear. You're still up 41% year over year with Tesla. We'll certainly look at that when we look at these financials as well. Some high level numbers is we have automotive vehicle gross margin coming in at about 28%. It was a spectacular nearly 33% in Q1. I was hoping that would stay over that 30% mark, but we'll talk about maybe some of the reasons why. We had CapEx in the most recent quarter, which I thought may have been a little bit more than this, came in at $1.73 billion. That was actually less than a quarter ago and just up fractionally from a year ago. They've done a nice job there. We'll talk about free cash flow when we get into the numbers. Now, the first thing that we got to realize with Tesla is analysts are anticipating the upcoming quarters to really accelerate over at Tesla. They are not pricing in any types of shutdown in Shanghai, and we've got pedal to the metal in terms of production over at Tesla for the next year. That is what analysts have priced in. Obviously, they'll rein those estimates and those predictions back if that is warranted here in the future, but the most recent quarter, obviously plenty of shutdowns over at Tesla. They actually contracted quite a bit on those cars produced, cars delivered, which were north of 300,000 in the previous 2 quarters. Those had to get walked back in the most recent quarter, obviously with the shutdowns primarily in China. But Tesla noted in their earnings call that the last month of this quarter in June was their best from a production perspective. And so that's why analysts are expecting revenues to accelerate from the $16.9 billion we just saw in Q2. We're expecting in Q3 closer to $22.5 billion worth of revenue, and Q4 we're expecting closer to $26 billion. Looking out a full year, you are expected to get over $28 billion more of quarterly revenue over at Tesla. Just 4 quarters from now, that would be over $12 billion more than this quarter. So ambitious projections, not only from Tesla themselves, but expected by Wall Street. We're expecting revenues coming in right about $85 billion this year. That would be 57% growth year over year. Next year, you're expected to balloon to over $115 billion. That would still be north of 36% growth on Tesla. And you're expected to grow kind of in that either mid-teens or 20% growth rate over at Tesla for the foreseeable future. From a financial perspective, things still look very good over at Tesla, understanding the fact that this quarter was really impacted by COVID shutdowns rather than actual demand for its products. Now, automotive revenues came in at $14.6 billion. So when you see this top line number come in at 16.93, this is all encompassing of every business that Tesla operates under. So here's that $16.93 billion. But in terms of the Model S's and the Model X's and the Model Y's, just the cars themselves generated $14.6 billion out of the nearly nearly $17 billion worth of revenue. They show you that the automotive vehicle gross margin is 27.9%. And again, that is down from last quarter, where it was a spectacular 32%, nearly 33%. In Q4, we were north of 30%. In Q3, we were also north of 30%. And a year ago, we were at 28.4%. So we actually saw those automotive gross margins contract a little bit. Somewhat disappointing, in my opinion, just in the shorter term. In the longer term, if you can maintain these and even bump them back up to 30, obviously very good. Now, this does include the regulatory credits of $344 million. I'll show you towards the end of the financial statements. Tesla strips that out for you. That's the gross margin that I tend to focus on. You flow down to an operating margin in the most recent quarter at 14.6. This is also in line with Q3 and Q4, where they were essentially right there at 14.6. Doesn't match the spectacular Q1, which we went in at length on our previous earnings video on Tesla, how 19.2% operating margin was just absolutely insane. If they can continue to get back to that mark, tell you what, Tesla's probably got some really good days ahead of it from a stock performance. Now, we talked about how production slipped to 258. You can probably better see it on something like this, where you've gone from a year ago at around 206,000 cars. You've accelerated as the economy started to open up where Tesla operates their factories, but then you obviously saw some shutdowns in their key market. So you slipped from about 305 down to this 258 in terms of those deliveries. So here's those 258 in terms of their productions. They do a 254, nearly 255 on that delivery side. You're seeing nice acceleration on the Model S and Model X, which had their models kind of revamped, and then there was some delay in ramping that back up. Looks like that's just solidly ramping up over the previous 2 quarters. Similar thing with the Model 3 and Model Y, although again, we saw it stall out a little bit quarter over quarter, but year over year, you're still up massively on the production side, up 25%, and you're up 27% year over year on that delivery side. More impressively, I think this quarter, and maybe even more interesting, is you had solar deployed over 106 megawatts, as I think is how they're presenting that. That is up 25% year over year. We'll see evidence of that certainly when we get to the financials. And of course, supercharger stations and the all-important service locations also continuing to grow. Now, from a production perspective, we actually saw quite a bit of change here. So we saw Model S, Model X, Model 3, Model Y production in California. That got bumped up a little bit. I think this was closer to 500,000 last quarter. Now you're up over 650,000 cars. They're constantly making little changes to not only the factories and the facilities themselves, but how they make the cars that make them a little bit more efficient. Shanghai went from north of, I think, 500,000 cars last quarter. Now I've seen internal memos where Tesla's expecting to do about 1 million cars a year out of Shanghai. That's essentially the capacity now. They note that it's over 750,000, and Berlin and Texas, both over 250,000. These were early ramp in Q1. They noted that they produced over 1,000 Model Y vehicles in a single week. This was in Berlin. In Texas, I saw reports that they delivered nearly 5,000 cars in a week. That would put you right on that 250,000 car mark. We certainly will see both of those factories continue to ramp up in Q3, Q4. That certainly is factoring in to analyst estimates in terms of the EPS and the revenue growth that you're expecting with Tesla over the next couple of quarters. Now, what's also kind of interesting here is that we had Tesla Semi here, Roadster, that's the same, but I think they added Robotaxi and others in terms of their to be announced product list, and we'll see if we get any updates from Tesla here in the conference call and in the coming days. Now, moving over to the financials, you see here the total revenues coming in at that $16.9 billion. That's up year over year, but kind of quarter over quarter, it is a decline. One thing that I wanted to point out here is our energy and storage business. So you have your revenues up here, and then you have your cost of revenues down here. And what I've always noticed about this is your solar and your kind of battery energy storage that you have in residential and commercial applications. You had $801 million worth of revenue from that business segment. This was a year ago. Look at your total cost on that at $781. So you've made about $20 million. Okay, not that bad, but essentially a rounding error from a revenue and a profit perspective from Tesla. The following quarter, you had $806 million worth of revenue in the energy and storage business, and you had $803 million in costs, essentially a break-even business. Notice in Q4, you had $688 million worth of revenue, but you had $739 million in costs, so you actually lost money in that quarter. Now, in the previous quarter, Q1, you had $616 million worth of revenue, but $688 million in costs. So as we've analyzed this over the last year, it's been a break-even or a losing business for Tesla by and large. Look at the most recent quarter. You had $866 million worth of revenue, which is a record over the previous 4 quarters that Tesla's produced. But take a look what happened here. You had just $769 million worth of cost. That's a nearly $100 million profit. Now, still essentially a rounding error for most part, especially from a profit perspective. But if it continues to move in this direction, we can start to think as investors, can this business get 3 times bigger, 4 times bigger, or is it a 10, 20, 30x type business? We start factoring those types of profits into the stock. Right now, it's running at about a $3 billion run rate over the last 4 quarters. Obviously, you start thinking, hey, can a business like that 10x? Now you're looking at a $30 billion business just from energy and storage. I'm not necessarily sure it can 10x, but it's certainly probably 3 to 4x over the next couple of years. Certainly, if it does it profitably, that might not be priced into the stock all in. From a cost perspective, Tesla actually did some very nice things. You see total cost of revenues went from 13.3 down to 12.7. You'd expect that, or you actually would hope that when your revenues drop, you want your total cost of revenues to drop as well. They did with Tesla. That means our gross profit slipped a little bit, but not nearly as bad as if they didn't control these costs as well. The other thing is we have our operating expenses here, which include research and development, which over the last quarter actually declined quite a bit. And we have our selling, general, and administrative line also went down from 992 to 961. Very nice move from Tesla. They have a little bit of restructuring costs. This is why when you see companies like Tesla and many companies are announcing, hey, they're firing people, they're laying people off, understand that they usually recognize kind of a restructuring and other charge. It might happen for a quarter. It might be several quarters. I've seen it multiple times with multiple companies. So understand that you won't recognize those cost cuts from a financial perspective for a while, several quarters, until those salaries and that restructuring, those severance packages kind of move off the books over at Tesla. You really won't recognize them because $142 million had to be recognized. So you have your total operating expenses, though, came in at about $1.77 billion. That's actually lower quarter over quarter and just up fractionally from a year ago. We were sitting close to 1.6 billion on those expense sides. I tell you what, Elon Musk runs this company very well from a financial perspective. This is about as clean as you see most companies, especially when we're talking about a car company. Now, on to the balance sheet. Speaking of clean and beautiful, this is what you see over at Tesla. You have cash and cash equivalents at $18.3 billion. I probably didn't stress it on the financials, but you had income from operations over at Tesla at $2.5 billion. Yes, that's down over $1 billion from the previous quarter, but it's well in line where you were in Q3 and Q4, where you had comparable revenue numbers, and it's up quite a bit over where you were a year ago. In fact, over $1.1 billion more worth of income from operations. A lot of that has flowed into the cash segment of Tesla's balance sheet. Now over $18.3 billion. Those of you who've been wondering about Bitcoin and the digital asset over at Tesla, it looks like they had some discipline. They went from $1.2 billion in Bitcoin down to just $218 million. Newsflash, companies like Tesla are probably pretty good, even exceptional at making electric cars. They're terrible at predicting when and why they should buy digital assets like Bitcoin. But the point to take away is they have just $218 million worth of Bitcoin. The vast majority of their cash is in that fiat dollar over at Tesla. Now, here's what crushes a lot of bear case arguments on Tesla. They have such a healthy balance sheet. They have over $18 billion worth of cash. I'll show you cash flows here in a second. They're producing positive cash flow at this company. They are not bleeding money anymore. They have absolutely no need for it. That's what puts Tesla at a competitive advantage from the Rivians, the Lucids. All the other electric vehicle startups have to continue to raise money in a higher interest rate environment and in an environment where equity values have absolutely tanked. It gets harder and harder to raise money. Tesla is not in that position. Look at the total liabilities. Every liability Tesla has is $30.8 billion. Again, they have over $18 billion in cash. While they don't cover their liabilities in cash, it's not very wildly tipped. And if you factor in all their property, plant, and equipment and all their intellectual property, you're looking at an asset total on Tesla closer to $70 billion. There's nothing to really poke holes on that balance sheet other than they bought Bitcoin at the top and they sold it when it went down. Now, in terms of the cash flows over at Tesla, positive cash flows making electric vehicles at a tune of $2.3 billion. This includes some stock-based compensation and some depreciation, as you'd expect with a company with this much equipment and tooling. There's a lot of depreciation on those types of things. CapEx, this is your expenditure on the factories and building things. Well, that came in much lighter than I thought. We heard Elon Musk make comments about how Berlin and Texas were burning money. Well, $1.7 billion in the most recent quarter, folks. That is essentially the run rate we've been on over the previous year at 1.8, and 1.7 in the previous quarter. They did a nice job controlling cost in that sense. You see, they took in about $936 million. This is the proceeds from the sales of their digital assets. They obviously had levels on cryptocurrency, or Bitcoin more specifically, that they wanted to sell out as it continued to go down over the last 3 months. That improved the net cash provided by the investing activities because they burned through about $1.7 billion on CapEx, but they got about $936 million back when they sold their crypto. And when you factor in their financing activities, this company added over $847 million worth of cash in the most recent quarter. The last thing I want to show you before we get and look at Tesla from a technical perspective, I'm seeing the after hours just up fractionally after being up again fractionally on the day. We'll talk about it's really interesting, Tesla, from a technical perspective. We'll talk about the last thing that I always talk about when we go through these financials is the vehicle gross margin, or the way they label it, automotive gross margin excluding regulatory credits. This is one of the last things they show other than kind of a gap to non-gap financial thing over at Tesla. I mean, this is like the bottom of the slide, and I think this might be some of the most valuable information. So you strip out those regulatory credits, which is 1.7% of gross margins. So you have 27.9% automotive gross margin, but 1.7% of that is actually regulatory credits. So just selling the steel and glass that makes up the Model S's, the Model X's, the 3s, and the Ys, you earn 26.2%. It was at an even 30% in the previous quarter. We were at 29.2 and 28.8 a year ago. We were at 25.8%. If you can maintain mid-20s and get them occasionally up to these 30% mark, folks, it just becomes a story about how many of these freaking cars Tesla can sell. I don't care what you're selling, whether it's a cell phone or a carpet or TV screens. If you can make 26.2% margin on that, you're going to have a wonderful company, especially the more and more you can sell. Now, in terms of Tesla from a technical perspective, broadly, the stock has basically kind of gone sideways for a while now. Yes, it's peaked up as high as over $1,200, and the bottom of the range is down here at about $550. I know that's a massive range, $550 to $1,200, but that's Tesla, okay? It's a volatile stock. It has an incredible valuation. We're talking over $770 billion valuation. That's something I probably don't speak about much when we go over these financials over at Tesla. The fact that you did $17 billion in a quarter, you're projected to do about $85 billion worth of revenue, and we're trading at 10 times sales, which I know is certainly not where Tesla has been in the past and where a lot of the bull case argument projects Tesla to go in the future. But let's be real, 10 times sales is richly valued, and that's why you have some wild swings in Tesla's share price. Now, more recently though, okay, intermediate term with Tesla, I would say the trend is kind of sideways to slightly down. Longer term, obviously the stock has been almost a straight arrow up. Very shorter term, I mean, we're talking about just over the past couple of months with Tesla. Quite frankly, it's been in a little bit of an uptrend, but it has not been confirmed with higher highs. So in an uptrend, I've got this green line here. In an uptrend, you start to make higher lows, and that's exactly what Tesla is doing. We made some lows back here in May, down here at about $620. We made a higher set in June at about $650. We made another higher set in July up here at about $660, and then another higher set at about $680. You would like to see that confirmed with higher highs as well, but unfortunately we're kind of wedging out here. And we saw in the case of Netflix, it actually broke to the top of that range in the after hours, which was an interesting technical signal in my opinion. Now Tesla, we have not done that. In fact, we are just stuck right here at the top of this range where we'd actually, quite frankly, expect sellers to step in on Tesla, push this one down to the bottom of this upper channel. We'd expect, if this green upper trend line is going to remain intact, Tesla will bottom out at about $695, close to $700 per share. This is looking like, to me, that you have buyers and sellers both have equal conviction at the current time, and you're having a compression of price. At some point, this resolves itself. If it resolves itself with Tesla going to the downside, you do have some support at that aforementioned $550 price target with Tesla. I think that's a fantastic opportunity to pick up these shares. I think more in the intermediate term, you have a downtrend that is, quite frankly, still intact since the beginning of the year, where you're making lower sets of lows all along the way, and you're making lower sets of highs. This longer trend is still what I believe to be intact. We're just in a shorter term area of consolidation, much like we were kind of in February and March. The stock kind of consolidates a little bit and then will resolve either up or down. If it goes down, you should have support in the shorter term at about $600 per share. Even if you break through that, you've got support at $550. If the reverse happens and the sellers dry up and the buyers materialize with Tesla, well, you could have an incredible rally on this one. This is why this was being watched very closely from a technical perspective. If the momentum goes to the upside, you could come north of $1,000 per share and then end up hitting your head on this upper trend line and still technically be in a downtrend. Because if you came up here to about $1,000 per share on Tesla, the technical pattern would tell you something like this would materialize, a large set of red candles over the next couple of weeks, maybe even months, to come back down here and retest 640. This is why at the current time, right now, I wouldn't necessarily be interested in buying Tesla, wouldn't necessarily be interested in selling Tesla. If we break to the downside and we hit levels of support down here at 600 or 550, that's where I'm definitely thinking about buying Tesla. If we break to the upside, we come up here and we test north of 900, maybe even potentially north of $1,000 per share. Quite frankly, I'll probably take profits on at least some of the Tesla shares I have, with the idea that we'll probably reach some resistance up here. The buyers will dry up, the sellers, the short sellers, the attacks on Elon Musk and the company will materialize over the next couple of weeks. You'll see some red candles come back down here and retest. I'll take some of my profits that I made up here and put them back into Tesla. That's personally how I would play this one in the shorter term. If you got that long-term vision, I would turn off all the noise and just believe the estimates that a year from now, we're going to be sitting close to $30 billion worth of revenue. Folks, that would be nearly a doubling of the revenue if there are no shutdowns in China and gas remains $6. I quite frankly think this is a reasonable target to hit, but boy, 12 months is a long time in this economy, in this world that we live in. We'll certainly be here to cover it for you here on the channel. Hopefully you guys enjoyed today's video. Back again soon with more. Good luck with your investments.